Hello, and welcome to the second of our Fleets in Charge webinar series. Today's topic is Supplying 2030. For those of you who don't know me, I'm Rachael. I work with the policy team here at BVRLA, and I'll be chairing today. We've got a jam-packed agenda this morning, so I'll crack on with proceedings while people are still joining. We'll be hearing from a variety of speakers about their experience of supplying EVs. Please don't be shy, use the chat box to share your thoughts throughout the webinar, as well as the Q&A function on the right-hand side of your screen. Make sure that you're in the stage section as well, rather than the event section, so that you're part of the main action for this morning. I'll be putting questions to all of the speakers, so please do let me know what you'd like me to ask. I've got two bits of housekeeping for you. First is running through our competition law rules. All BVRLA meetings and events, including social events, are subject to the application of competition law and therefore must be conducted in compliance with competition law. Any business information which is sensitive or strategically useful must not be discussed, including any reference to pricing, margins, discounts, trading terms, use of third-party suppliers, or market share. Members are reminded that failure to comply with competition law may bring with it serious consequences for them as individuals and their companies. Such consequences include heavy fines and, in certain cases, imposition of criminal penalties and sentences. So please do take that very seriously. Secondly, if you are having any tech problems during the webinar, there is an FAQ guide which Fran will share in the chat for you. I would like to share also the advice from the TV show The IT Crowd. Have you tried turning it off and on again? All seriousness though, reloading the page can really help if you've got some buffering issues, but fingers crossed, nobody should need it this morning. So before we kick off with our first speaker today, I wanted to get you all warmed up a bit with an icebreaker poll, which will appear any minute now, as if by magic, in the right-hand side of your screen. I don't know about you, but all last week, there was only one thing that anyone wanted to talk about in meetings in my house. And that is, of course, the ill-fated European Super League. I can practically hear people groaning at me through my screen right now. I apologise to bring this back up again. So partly to troll my colleague Toby, who is a Spurs fan for his sins, we've come up with the following question for you all. So it should appear now. The football concept of a European Super League crashed and burned this month. But are we in danger of an electric vehicle Super League emerging where certain fleets have the cash, incentives or business models to make the transition now, leaving others in their wake? Please place your votes now and I will have a look at what you all have to say on that. Okay, we're getting some votes in here. This is very exciting. It's almost like a game show for me. Let's see what people are coming out with. Okay, it's looking quite strong. No, I shouldn't speak too soon. It's still quite even. Wait for a few more votes to come through. Okay, so it's at the moment it's looking sort of 60-40 yes no. So that's quite a fairly even split. It's something I'm going to raise with the speakers today as well and see what their views are on that. But please do keep voting in, and we'll see if that changes at all as more people add their say on that. So on to our first speaker, who is Julian Hetherington from the Advanced Propulsion Centre. Julian is going to run through a few of the essential things you need to know about what is coming down the government's EV pipeline. Do share your questions in the Q&A box, and I'll ask him a few at the end of the presentation. Julian, thank you so much for joining us, and please do take it away.
Well, morning, everyone. Thanks very much for joining the session this morning, and it's great to have the opportunity to speak to you. I'm Automotive Transformation Director at the Advanced Propulsion Centre, and we're an organisation that works with the Automotive Council and with BEIS, and effectively tries to support, as we have done since 2013, the development of low-carbon propulsion technologies in the industry from an R&D perspective. And a year ago, we were also selected as the delivery partner for the Automotive Transformation Fund that was announced by the government almost a year ago. Just want to touch on a few things. Quite a bit has happened over recent months. We've seen a bit of a rattle through of fairly big drivers for the industry. We've seen the EU trade agreement, the much vaunted trade and cooperation agreement as it's known. We've seen some big policy announcements towards the end of last year around 2030, 2035, petrol, diesel and PHEV vehicles. And we've seen more recently some additional funding for DFT, through DFT for charging infrastructure, and confirmed funding for the ATF. And very recently, changes to the plug-in car grant scheme. And we must not forget, 2020 was really an annus horribilis for the industry when we look at the impacts of COVID. And some of those impacts, despite real good recovery in many areas, are actually starting to haunt us now. So what impact will they have perhaps over the longer term? So very briefly, around the Trade and Cooperation Agreement, it was a bit of a late deal, a wonderful Christmas present on December the 24th on Christmas Eve. And that had the effect really of creating some investor hold-off. It's inevitable that there are some supply chain casualties, but perhaps so far been remarkably few. But I think we have seen some instances of supply chain partners perhaps looking to protect their business and consolidate, and sometimes that consolidation has not happened in the UK. But by and large, the outcome of the TCA was quite positive in our view. One of the impacts is that it will drive regional capacity in battery manufacturing and other EV commodities by virtue of some of the rules of origin that are contained in it. And the pain was initially eased through some transition periods that run through till the end of 2023, and then again a second period until the end of 2026. But the targets, frankly, are modestly aggressive. So there is a lot of work to do to support industrialization of many of these technologies, which have to date got a predominant supply base from Asia. And the key feature is that, more or less what happened before with accumulation of content to support these rules between the UK and the European Union is a feature that continues by virtue of this deal. So conclusion, drives the need for capital in the short term, but will probably benefit the industry in the long term by helping accelerate the development of these technologies in the UK and beyond into Europe. The other big forcing function is around 2030 and the registration ban for petrol and diesel vehicles. And this was frankly necessary to decarbonise the transport sector. It accounts for about 28% of greenhouse gas emissions in the UK, and is really the only sector that has not been making massive gains, largely because of a shift in purchasing habits. And frankly, we're bouncing around the technical limits of what can be achieved with petrol and diesel vehicles. We've got a target to get to of 55 grams a kilometre, and pretty much the only non-plug-in car that you can buy today, the best that you can get is around 85 or 86 grams. So we're really going to struggle with just the existing technologies. We have to electrify, and clarifying the landscape is really going to help accelerate. So it's an opportunity for car companies to rationalize product lines and be quite bold with some new platforms to avoid having to have the content of petrol vehicles, diesel vehicles, plug-in hybrids, and battery electric vehicles. Just clear the decks, think about a new strategy, but that has obviously got some pain in terms of potentially throwing away some investment to date. And the UK industry is perhaps a little bit more exposed because we are a mass exporter of internal combustion engines. About 1.2 million engines a year are exported. It would be great if the whole world had aligned targets, but unfortunately we don't. So I think the outcome of this is that it's probably delayed some market entries, which will impact on accessibility in particular for some segments of vehicles. Then just briefly looking at funding and COVID and the long term. We need to recognise that these transformation investments are massive. If you're looking at satisfying, perhaps 20 or 30 gigawatt hour of battery manufacturing alone, you're looking at investments that are around £2 to £3 billion for a single factory. And we're going to need probably 4 of these by the time we get to 2030. So this is not insignificant investment, and we've got similar scale investments upstream in the supply chain as well. So we need lots of that. And the key, I think, for us is, that this has come at a time when the industry has been quite hard hit with the cash flow impacts of COVID and dropped sales. We've seen the industry reset from well over 1 million units to just under 1 million units in 2020, and it's going to take some time to recover. So these companies are wounded, it's affecting their investment plans, and now there is this huge burden of trying to accelerate the investment in these new architectures and upstream in the supply chain, when there isn't an awful lot of cash around. So I think we've got to focus on the carrots and not the big sticks, and really look carefully at how we can support the acceleration of this transition and industrial investment. So that's a quick perspective of the things that we see as the big drivers and have come out of the policy announcements over the recent months.
Brilliant. Thank you for that, Julian. So please do put your questions into the Q&A if you've got any questions for Julian. I will kick off, taking chair's prerogative there. And my first question for you is, what impact do you foresee the plug-in grant cut having on EV uptake? Obviously, that was a big piece of news last month. What do you think the impact's going to be of that?
I think in some respects, it's going to have a short-term impact for sure, but in the longer term, I think relatively modest impact. We perhaps shouldn't have been surprised that there was a change coming when you look at the impacts of similar policies and incentives in other parts of the world. And where we really need to address is accessibility, particularly at the lower cost end of the market. And there were arguments that perhaps the incentives were perhaps over generous for people that could afford these vehicles in any event, and we're really trying to target things. If I look at some data from Norway, for example, the uptake of electrified vehicles as a result of their incentive scheme was 15 times higher per capita in the upper quartile of income bands compared to the first quartile of income bands. And that's a bit of a perversity that I think the government was keen to avoid replicating in the UK. We've got to focus perhaps not so much on initial incentives, but on making sure that we can drive down the fundamental cost of manufacturing vehicles at a lower entry price, and that will assist the uptake. That I think is probably the bigger challenge. So it's disruptive. It was at very short notice, but I think over the longer term, it will probably not have that much of an impact.
That's interesting. We'll ask that question to some of our other speakers as well, and see what their views are too. Talk about issues with the supply side, for example, the shortages of semiconductors. That's been coming up in the news lately. Do you share concerns for supply now that we're post-EU exit? How long do you see this being an issue? And do you envisage any factors that will pose similar problems? I'd also be interested in hearing the audience views on this too. We'll pop a poll question up now, so please do let us know what you think by responding to that poll.
I think with semiconductors that are impacting the car industry, we've seen almost a combination of perfect storm factors. So we've seen increasing demand for these ubiquitous, supposedly, devices that are using consumer electronics. We're all sat at home, by and large, using lots of consumer electronics devices which use the same chips or the same manufacturing capacity. So that demand has gone up, and it's typically higher margin business. Car industry operates on quite short lead times and uses that same capacity, and the manufacturing capacity was clearly interrupted last year through COVID. So we've seen reduction in output, increase in demand from one sector, and the car industry is the one that's been squeezed. Over time, electrified vehicles are still going to need lots of these devices, but I'm more concerned about some of the other materials that perhaps will be required for electrified vehicles. And I think actually the trade and cooperation agreement and leaving Brexit is actually the least of our worries when it comes to security of supply of many of these materials. I'm concerned about longer term capacity for things like nickel and nickel refining capacity, cobalt perhaps, lithium as well. When we look at the balance of supply at the moment, it's actually about even, and we're seeing almost record lows for nickel pricing, for example, which is a fundamental component that goes into electric vehicle batteries. We look out to 2024, actually it's going to be difficult to bring on refining capacity fast enough to suit the demand driven by electric vehicle batteries, as we see this exponential rise in demand for battery capacity, but we're seeing quite long lead investments required to bring it on for those upstream materials. So that's where I think we have to have a focus. And that is also where we're focusing some of our attention through support mechanisms such as the Automotive Transformation Fund, looking at that upstream materials supply chain. That's what we've got to watch for. When we build an industry, we've got to consider the entire end-to-end supply chain.
Yes, on a similar sort of note, I was reading only yesterday about recycling of batteries, and that being a potential opportunity for the UK for manufacturers. That's very interesting, Julian. We've got a question through from Tim Bailey. Hi, Tim. He's asked, given the low margins on street parking, where do you think the investment will come from for an area that is seen as critical to EV take-up progression?
I think this is where Department for Transport has got to step in and support on-street charging. It's all very nice, you know, I run a nice electric vehicle with a nice long range, and I've got a home charger, so that's fine. I've got off-street parking. But if you live in an urban area, or you live without any on-street parking, you're really going to struggle. So this is where the incentives and the mechanisms through local authorities, through other charging infrastructure, will have to help to improve the usability of electric vehicles. And we'll see a lot of that supported at sort of end of street or local petrol station or coffee shop, but there is going to need to be some investment to cover the upfront capital cost of these charging stations in largely residential areas where housing density is quite high. And also consider apartment buildings, flats, high-rise buildings where you may have off-street parking, but it is not necessarily allocated to an individual. So there needs to be some flexibility in the support mechanisms for those charging situations as well. And and the slug of money that was allocated through OZEV for charging infrastructure support is quite significant, and it will have some real traction over the coming years, I'm sure.
Thanks, Julian. Just one last question I've got here for you. What do you think technology will look like that will meet the government's new view of the 2030 to 2035 hybrid definition, which says new cars and vans can be sold if they have the capability to drive a significant distance with zero emissions? What do you think that technology is going to look like if it's going to meet that definition?
I think it's really going to be an evolution with an extended range of today's PHEV technologies. But frankly, as we get closer to 2030, our own projections are that the volume of PHEVs actually sold in the UK will reduce very significantly as a proportion. So we're expecting quite significant PHEV penetration as a percentage of the market over the next few years, but really diminishing by the time we get to 2030, in part because vehicle manufacturers will not have necessarily aligned technology cycles that all finish at the end of 2030, and it's very expensive to accommodate different propulsion technologies in the same architecture. You just can't afford to keep it all going. So what will it look like? I think pretty much enhancements to today, possibly with slightly larger batteries, certainly with faster charging capability and better regeneration capability, more efficient regeneration capability. But fundamentally, we don't think it's going to be very significant by the time we get to 2030, except for specialist applications, specialist usage cycles.
Thank you, Julian. And I'm going to be very cheeky. One very last question, if you just conscious of time, so you can just give me a really quick answer to Paul Kirby's question. I would expect nothing less of you, Paul, than to ask this question of, do you think each transport segment should have a dedicated focus on funding and support? Cars at the moment seem to be taking the lion's share of investment, but vans and trucks need the support too. What do you think of that, Julian?
I think that's a very difficult concept in terms, to hypothecate money for specific segments is very difficult when you've got technologies that transcend different vehicle segments. Our fund and our activities support all vehicle sectors. So we do everything from cars, vans, heavy goods vehicles, passenger service vehicles, off highway, mining trucks, heavy haul trucks, the whole lot. And we're using the same sorts of technologies, and there is often pass through. So I think to hypothecate for particular segments is probably inappropriate. We can get the best bang for our buck by focusing on the technologies that can transcend these vehicle segments. And often something that starts in one segment can really rattle down and start to help another. If you want to get cost down, you need to start with volume. And then that volume cost reduction plays back into some of these other segments as well. That's the key.
Thank you, Julian. That's all we've got time for, but thank you so much for sharing your insights today. I don't know if you can hang around and join in some of the chat as well. If anybody's got any other questions for Julian, you can always pop that in the chat and pick that up a little bit later during the webinar. Thank you, Julian. So now on to our next speaker, Chris Jackson, who's here to share some insights into Centrica's EV plans. Once again, please do keep sharing your questions. I'll ask them of Chris after we hear from our third speaker. So we'll have 2 more presentations before I go to questions again, but do send them in any point during the next 2 presentations. Thanks for joining us, Chris, and please take it away.
Thank you, Rachel. Good morning, everyone. I'm Chris. I'm responsible for our fleet partnerships within Centrica Business Solutions. So we work with fleet operators directly and through our channel partners as well. We're the 3rd largest fleet in the UK and also the largest energy company. So what we build for our own fleet, we now offer to others looking to make their own switch. I haven't got long today, so I'll kind of rattle through some of our, some of the key headlines of our story so far. So we've got a firm commitment that our entire fleet of 10,000 vans, 1,500 cars will be all electric by the end of 2025. We've got 1,000 electric Vivaros being deployed right now, with a further 2,000 on order. We've got around about 400 plug-in cars as well. Briefly, our first EVs were on the fleet back in 2013. We took delivery of 113 Nissan Nissan ENV200s. Everyone thought we were a little bit mad then. It was a bit early. However, 8 years on, 3 million miles worth of experience, which has given us a huge amount of important information, like the maintenance, the servicing, reliability, duty cycles, and residual values, and a live bit of myth busting, if you will. So all of those vans are still on the road, and a big chunk of them are enjoying a happy second life with a courier company in London. But for a few reasons, kind of nothing since that initial batch has kind of really met our needs until the Vauxhall Vivaro E became available. If you speak to our head of fleet, Steve, he says he isn't worried about the 2025 deadline. As he says, we've got minimal oddball stuff, as he calls it. We're pretty good at buying vans anyway. We normally renew around 2,000 every year anyway. But what I am saying here is plan ahead, and this isn't the impossible task it seems. Although you do need to take advice from your trusted advisors. Don't try and do it all on your own, obviously. For others looking to get started, you really do need to get going with this. You do learn by doing, but you do need to get boardroom approval. Direction from the very top is critical. In our case, we've got a really supportive leasing provider, and we found that incredibly valuable. We've played around with lease terms on both the diesels and the EVs. So all the vehicles are now in a replacement cycle ahead of our deadline. In a couple of years, there's going to be some really good competition in the larger van segment. So we'll reckon around 3 or 4 options when we come to renew those. We do evaluate the vans rigorously to ensure they can perform. Don't necessarily take the OEM's word for it. Not all have passed the test or are suitable for our particular uses. On the cars, very briefly, they are easy after all, joke. We've strangely found a direct link between the massively lower BIK of an EV and suddenly people's range anxiety has pretty much disappeared. We do think government policy has obviously dictated the direction of our policy and others. We are confident next year will be BEV only for the cars rather than BEV and PHEV of today. Just some other stuff briefly. Open protocol chargers, really important. This way we can kind of mix and match the hardware right now and in the future as things can and will change. will still be able to pull the data from those charge points. Not all hardware is suitable for this, and in the past we've kind of literally paid the price to replace closed charge points with more friendlier ones. Driver acceptance is key. In our case, we've kind of sold it on with, it's fundamentally a better van, the technology, the size, the convenience, the experience, etc. But this is really important. Choosing the right drivers in the early stages is absolutely vital. These are the people who just do not want to drive a diesel van anymore. They understand this is new and things can and do go wrong, but they just want to be part of making it better for everyone in the fleet. These men and women love their vans, and they're very willing mobile ambassadors, both internally for us and when out on the road. We've seen incredible public support and interest. People letting our van charge first, even offering to pay for the energy. Even traffic wardens seem to love our electric vans. We find that there's kind of three main driver groups: the petrol heads, or whatever the equivalent of that is these days. These just want to make it work. They get the best new vans first, but they understand you might need to swear at it and switch it on and off again a few times. These are your true evangelists, so start with these. We then have the fence sitters. Need a bit of encouragement, bit of a nudge, sell them the van specification. They see the petrol heads and how much they like their vans, and they want their own. And then in the end, we have the anti-establishments who kind of cross their arms and don't really want anything new. But these are going to be left with the ancient diesels right up until the last possible minute. But we've got a plan to get them in the end. And finally, our own EV charging platform has really enabled us to do more quickly. Primarily the headache of accurate reimbursement of business mileage when the fleet is charged at home. Way back when we started, this was actually run off a spreadsheet, so hardly scalable. And in our view, there isn't anything else out there on the market that's suitable for us. So we built our own platform based off our existing energy management system. And that same system works across home, workplace and public roaming as well. It has been designed and validated alongside the uses of the British gas fleet, but now it's available for others to use too. So yeah, that's a bit of a whistle-stop tour. So thank you, and I'll kind of hand you back to Rachael.
Thanks, Chris. Brilliant whistle-stop tour there. We'll go through some questions in a few minutes. If I can ask Peter to come to the stage. We've got Peter Macdonald with us. He's going to now give us a bit of a glimpse of the EV strategy in place at Nissan. Welcome, Peter. Thank you so much for joining us, and over to you.
Good morning, everyone. I'm Peter. I'm the fleet director at Nissan. It's a real privilege to present to you today, and especially to follow Chris at Centrica. Centrica have made a major investment in EVs. They first started piloting electric LCVs back in 2013, and they've learnt through testing application. They're really one of the real pioneers in this space. A little bit about Nissan. We have a large footprint in the UK and a large investment in electric vehicles. We design, do research and development, and produce in the UK. In Sunderland, we build Qashqai, Duke and Leaf, and we've considerable experience in the EV space. We launched Leaf 10 years ago, ENV 200 over 7 years ago. As a brand, we are the largest supplier of electric LCV, and we're the second largest supplier of battery electric vehicles to UK fleets, second only to Tesla. I believe the purpose of today is to talk about how fleets electrify, and the case study of fleets like Centrica and walking through what they've done is a great place to start. We draw great inspiration from our customers, hearing the stories of how fleets like Dundee Council, Gloucester Police Forces, DPD, National Grid, Scottish Power and many others, and the learning they've been through really does help us all to support the transfer of best practice. We see three clear trends that we wanted to share today. One is clearly full battery electric vehicles have hit the mainstream, and drivers and fleets alike are accepting the transition. Demand for battery electric vehicles is growing. From a benefit in kind perspective, drivers are able to make savings of £3,000 to £4,000 per year, transitioning from an ICE to a battery electric vehicle. They're also growing in demand in the personal lease space, and to the point that in 2020, 3.5 times more battery electric vehicles were bought by UK fleets versus the prior year. And that's in a COVID year where the total market was back. In 2020, 2019, there were only 4% of the true fleet passenger car market. But in 2020, they were 18%. To put this growth in perspective, in 2019, Nissan Leaf was the 17th best-selling C-segment hatch in the market. In 2020, Leaf broke into the top 10, and then in March, Leaf entered the top 5, overtaking vehicles like Leon, Octavia, Focus, and 1 Series. So it's fair to say EVs really have hit the mainstream. The second thing is that the best fleets test and trial, as Chris alluded to. All fleets will need to be EV focused by 2030, but the best ones will have learned and optimized their fleets in advance. Many of the fleets we work with identify advocates and build out from trials, where they put EVs through end user testing, they simulate journeys and operational uses of vehicles, starting firstly with parts of the fleet they believe can transition to electric vehicles the easiest. And once they've gained acceptance, they build out from there to other use cases with confidence. They often utilize a number of demonstrators, or they purchase a small number of electric vehicles to test and learn. Now, early on in my role, the aptly named David Watts from Arval shared some great wisdom with me. His view was you couldn't simply test EV driver suitability by looking at someone's journeys today. Anyone could switch to a BEV. It was just dependent on how much disruption or adjustment to the norm they could accept. And we have many fleets that use BEVs for activities on paper that looked impossible. But with relatively small adjustments to working practices, they could make them work. And I truly believe it's these fleets that test and learn early that will have a competitive advantage over others in time. So the most successful fleets pilot the use of EVs. The third trend is that the electric LCV market is the next big source of growth. The electric passenger car market has been hotter than the electric van market. There are still relatively few players in electric LCV, and they haven't benefited from the same stimulus, such as a benefit in kind change. The market is still evolving, and to achieve the 2030 goals, the change will need to be more rapid. From our data, we sell over 80% of our electric LCVs to major corporates and public sector organizations. They're often bought outright and configured to a certain specification that fits them, and they're likely to be retained for some time. So apart from the limits to new van supply, there's likely to be some limited supply of used electric LCV, given the longer vehicle retention periods. SMEs haven't been the early adopters of electric LCV to date, but they most certainly will in time. Fleets will need to make more complex decisions about charging infrastructure and driver usage policies. The LCV fleets that can learn to operate their electric vehicles most optimally will have a real competitive advantage. They'll be very dependent on the collective resources of OEMs, leasing companies, and intermediaries to inform and support this change and transition at the right time in line with their operations. In conclusion, I believe it's the collective responsibility of the whole BVRLA member ecosystem to support this transition and to support it with pace. Thank you.
Thank you, Peter. So we've had lots of questions coming in, so I'm going to try and rattle through as many as I can for you both now, and let's see how we get on. So we've had quite a few. Chris, turn to you first. We've had quite a few questions relating to charging, so I'm going to try and bring some of these together so you can answer a few people at once. So we've heard from, we've got Paul Kirby's been asking about how important rapid charging capability is for vans to make them viable. He's asking sort of what your daily mileage is on average. And we've also had, in addition to the rapid charging question, a few questions around public charging. So Toby has said, great insights, Chris. What are the key challenges of relying on public charging for your van fleet? And then if I can also bring in a question in here as well, we had another one from Pete, oh, sorry, that one's for Peter, from Nigel Casey. But I think it's also one that Chris would be able to answer, which is what proportion of your fleet is charged at home, at public network or at work. So Chris, if you can kind of think of an answer to those sort of 3 points at once, that would be brilliant.
No problem. So I'll do the best I can in the time that we've got. So we've to answer them not in the wrong order. So we're like a lot of companies. So our van drivers generally haven't got the luxury of their own driveway. So whether that's 60, 70%, are going to have some form of either en route or on street or away from home charging. So that's something we're working with through our partners with. The first batch of drivers are predominantly home based. However, we've got a good number of the drivers, certainly with the latest vans that are on the road now, that don't have access to their own driveway. So we have then a mix of slow and rapid chargers. We have a preferred rapid charger and then a standby rapid charger. And some of our drivers have access to long stay council car parks, so overnight parking. So we paid for the parking ticket, annual basis, for instance, so they can charge 7 kilowatt overnight in certain locations, and they know the locations of the DC chargers when they need them. We have discounted rates on DC charging. I think that's important. Paul, I think it was you asking about the DC chargers. Some of the DC charging rates are really high. So we've got an amount built into our TCO model that we can't really go above that. It becomes uneconomical. So we're very aware of that. And we've done some pretty good negotiation with some of the more willing public networks to make that work. We're not going to solve this on our own. That's the thing I do want to say here. This is a collective thing that we need to work with the right organisations where they really get this, who understand that there is a need for a fleet like ours and many others. Do things slightly differently for those drivers that haven't got the luxury of their own driveway. So apologies if I've kind of rambled on there, but there was hopefully covered a few points.
Yeah, that's brilliant. Thanks, Chris. And Peter, that last point, what are you seeing with the percentage of where people are charging their fleets? What sort of feedback are you getting, and what are you preparing for on the public charging, work charging, home charging sort of front?
Yeah, evidently much easier to charge an electric vehicle if you've got off-street parking, and that's still going to be for early adopters the easiest source. And you can imagine as we turn back to workplaces more frequently, workplace charging will be another option open to people. And then we fully advocate the need for better public charging, on-street charging in particular. Our concern as an OEM is that at the moment, very much like Julian mentioned, electric vehicles are more accessible to the affluent. If you've got off-street parking, it's very easy. So we are big advocates of the need to get better public charging infrastructure and on-street charging infrastructure. We think that's particularly important for the electric LCV market and for fleets like Chris's when Centrica vans are needing to be operational, and they're not always going to be at home. They need to be out and about, and they're going to need access to public infrastructure charging. So the more that's about, the better. But we've got all confidence, and we've seen all the statistics. It's growing, and it will get stronger. Market factors will grow it. As there are more electric vehicles on the road, there'll be more demand for charging, more commercial opportunities for electric charging infrastructure suppliers to place that infrastructure on streets and in public places.
Very interesting. We've also had a couple of questions through. I'm going to, again, try and group a couple of questions here to make sure that we can answer everybody. We've had a few questions around sort of the theme of upskilling people. So we've heard from Amanda Brandon, who's asked about Chris specifically about whether you've been having to train your drivers to get used to driving an EV. And then also Jean Hay has asked about problems. Are there any problems with the speed of upskilling technicals for servicing and repairs, which I think, Peter, you'd also be able to come in on as well. So maybe I'll go to you, Chris, first, and then Peter. Yeah,
great question. Yeah, training, really, really important. We've seen huge value out of training our drivers. If you think of that, they're coming from a place of a manual diesel van to it's not really an automatic, but a van without gears that is electric, and you really have to drive them in a different way to get the best out of the technology, I will say. So choosing the right drivers, as I've said, is really important. But we've got our own bespoke bespoke training workshops that all of our drivers go through to get the best out of the technology. And then for certain drivers, we'll have direct one-to-one training just to make sure they really understand how to get the best out of them. So don't drive it like a manual diesel van is what I'm saying. But one of the things, just to make it a little bit more real, is that we use online. We've got an internal Yammer channel, and one of the things that the engineers do, they compete with each other on who's the most efficient driver, who can get 2.5 miles per kilowatt hour. One guy was saying he got an extra 18 miles going down a particular hill in Worcestershire. He says, "Oh, hey, make sure you can use that one if you can." So again, the mindset of these early adopter drivers is super important. But training, we do that rigorously, and we do it in-house.
Great. Nothing like a bit of competition, healthy competition to spur people on. Peter, do you want to come in on this?
Yeah, Chris's answer is brilliant. And we see similar things across other fleets as well, where it really is about piloting. I don't think any fleet's successfully done this on scale without a pilot. You trial it, you find advocates, you make it work. Word of mouth then really helps. And those people that have used the electric vehicles first, and maybe you have to invest in some training for them and support them through that transition. But if that's a positive transition, that positive word of mouth goes to other drivers. So we see it just really building out, finding advocates from a pilot. In point to the SMR piece, the thing we do see is that the service and maintenance on a battery electric vehicle, whether it be a passenger car or a van, is much simpler than an ICE. So I guess there's other benefits around reduction in downtime. That battery electric vehicles ultimately will have lower service and maintenance than a plug-in hybrid. From that point, that there's less that can go wrong. Pilot's really helpful. But and these are some of the experiences that fleets that are proactively trialing and piloting are learning. What is downtime of an ICE versus an EV, and how do I operationally optimize them?
Great. I'm going to ask one last question. I'm conscious that I've not been able to go through everybody's questions, so perhaps I can ask you both if afterwards you feel free to have a look in the questions and do some answers directly as well. Just conscious of time. But I'll just ask one final question, which is from Patrick Hall, who's asked, do you think the government should adopt a UK ZEV mandate or retain existing EU-derived CO2 standards and make these more stringent over time? Chris, shall I go to you again first?
Peter's probably a better place to answer that. From an officially perspective, I've got my own personal opinion, but I'll let Peter answer that. Okay,
I know that mandates are an interesting topic at the moment. Peter, do you have any views that you can share on that?
We accept the government mandates as they are. I know you asked an earlier question about the plug-in car grant. Yeah, we would like it to last as long as we could and be as generous as we could. But we're more or less accepting of the changes. We agree, and I think you had a great answer on that from Julian in terms of benefit in kind makes a big difference. And you've got some strange things at the moment where you could have a £100,000 Porsche and pay less company car tax than a Ford Fiesta. So I think that the top of the market's very much supported. The plug-in car grant is now more concentrated on the lower end of the market. I think that makes a lot of sense. We support the 2030 government mandate. And we want to help support fleets getting there. Evidently, it's going to be more challenging on electric LCV than it is on passenger cars, just because of the variety of issues we've talked about through supply and number of manufacturers playing in that space, and the greater complexity of those fleets to transition. So we would accept and support the government mandates as they are, and the incentives that are in place. And probably the thing we would be pushing for is more incentives and support for electric LCV, because we think that's particularly important. And then the things we've all collectively talked about in terms of public charging infrastructure to enable those fleets to operationally perform with less disruption.
Brilliant. Thank you both ever so much. We've run out of time, well, even overrun over time, but there's been so many questions and so much great insight there. If I can just ask you, like I say, if you want to have a look at some of the questions we didn't get to in the Q&A, then please do feel free to carry on these conversations there. But thank you, Chris and Peter. So now we're going to turn to our panel discussion. So I'd like to now invite to the stage our panel. We are lucky today to have 3 experts with us. We have Konstanze Scharring coming from the SMMT. We've got Christoph Domke, who is Clean and Smart Mobility Lead at FTI Consulting. And we have Gary Harrison, who's joining us from Rivus Fleet Solutions. Welcome, everyone. Really glad to have you all join us today. Now, once again, please do send in your questions for the panel in the Q&A section, and I'll crack on with that as quickly as I can. But just to kick off, I'd like to ask a question to you all, and it's one that we've discussed quite a bit this morning, so I'll put it to the audience as well to answer in the poll section on the right-hand side, and that is, what impact do you foresee the plug-in grant cut having on EV uptake? Maybe while the results are coming in for our poll, Christoph, maybe I can start with you to share what you think of around the plug-in grant cut.
Sure. Good morning also from my side. I think it will be minimal over the next couple of months. Probably some impact long-term, probably even less. I think it's probably less the actual cut of the grant, maybe the eligibility. That is more of an issue that I see from a lot of clients on our end, because what you do is, I think you can see at the moment, you indirectly penalize technology development by removing the 35K threshold, or more or less excluding vehicles that are over that threshold. You see a lot of the vehicles on that end, German, US ones, they have the highest ranges, longest ranges that are available in the market. So by penalizing those, I think you also hinder indirectly technology development. I think what I heard so far before, I can definitely agree. I think I see an issue particularly on the van side. I think that needs to be tackled. I think the vans are probably the hottest segment at the moment out there. I see a lot of other markets around the world investing in terms of subsidies and investing in terms of grants, pushing the particularly the EV light commercial vehicle sector, an industry where it's all about total cost of ownership, much more on the car side. So I think it's important to push this forward. And maybe an additional point that I think a lot of people have neglected, and if you look at publicly available studies and surveys in the market in the UK, but also been released over the last couple of years in Europe, is actually that the majority of the population in those countries, also the target population, the people that are eligible for driving electric vehicles, are unaware of grants or subsidies available in the market. If they're unaware, of course, they're not taking advantage of those. So you can see that my personal opinion is that the impact is on the car side probably less severe than other people think. I think on the fleet side, of course, much more. Many more people depend on this, but on the car side, I would say probably more minimal.
Thanks, Christoph. It certainly, that seems to be tying in with what the poll is coming back with getting much more people saying minimal impact at the moment, but I'll keep one eye on that. I'll turn to Gary next. Do you agree?
Yeah, I agree with what everybody said so far. I mean, the one thing for me that I will say is that it's the amount of notice and the consistency. Certainly when you're replacing large volumes of vehicles in large fleets, which is the area that we predominantly work in, you're talking business cases and financial models that have been agreed many, many months in advance. And it's the consistency that helps businesses plan correctly and accurately to make this happen. So it's consistency of approach that is probably of more interest going forward, and what we're really looking for.
That's interesting. And Konstanze, can you come in and share what do you agree with what the poll's saying and what you're thinking?
Absolutely. Thanks, Rachel. I would definitely pick up consistency from Gary's contribution and maybe add a bit on Christoph's. I mean, I think, first of all, we need to see, obviously, this change in eligibility in the context. You know, it came literally whilst the industry and the whole country is in the middle of the COVID pandemic. The showrooms are closed. You know, manufacturers and sales companies are there to try and make sales happening over time. And this is when the change came in. And we're also at the end of the transition period and have other disruptions. So from our perspective, obviously, the EV story last year, and particularly the fleet EV story, was a really positive one. But in terms of the private consumer and how we signal to the private consumer, how we translate government's objectives into the reality in the market, this is where we still need to have consistency of messages and consistency of incentives. And a lot of people were left dry hanging. And in relation to that, also the manufacturers that were trying to make sure that the consumers are not out of pocket and actually continuing with their sales when we've just lost our biggest market. So I would say, as you know, we felt it was the wrong move at the wrong time for exactly those reasons as to where we are, and where the actual impact is will only be visible in Q2 and Q3, and obviously longer term we need to look at it. But the biggest challenge really that we have for the UK and in terms of allocations in the future is what Christoph said, the international picture. If you look at the kind of market incentives that are available and are made available as part of COVID recovery and the recovery packages, and compare that to the movement in the UK, where you have high ambition policy but low ambition incentives, then that can play out in allocation decisions, in addition to what it tells the consumer. So we would really argue, if we have high ambition policies, we really need to bite the bullet and overcome what survey after survey tells us is still a barrier to consumer uptake, which is the cost, and I'm sure we'll come to that, TCO as well as upfront price going forward, as well as the infrastructure and the adequacy, the experience of the consumer. So we really need to tackle them, and that's what the focus should be in 2021.
Thank you. We're having a few questions coming through. The first question is from John Lindsay. He's asking, if the benefit in kind benefit was removed or significantly reduced, do you think that there would be the same uptake of BEVs in the fleet sector, and where is the volume currently coming from? I don't know who wants to start on that. Gary, did you have a view on that?
Don't really have a lot of involvement in benefiting kind or look after LCV fleets where there isn't a benefit in kind option.
Yeah, no. And Christoph, would you have anything to add on the benefit in kind point?
Yeah, I think, as I mentioned before, I think for the light commercial vehicle sector, any kind of grant subsidies, benefit in kind schemes are absolutely essential, because it is a sector where people earn their living with driving. So any kind of reduction you can give them in terms of costs that they incur is absolutely critical. So if you take the benefit in kind tax available away, you need to subsidize it somewhere else. Particularly in this sector, it's important to offer as many incentives as possible. Particularly, it's an industry that has high growth potential. It's an industry that sees a lot of new players popping up. It's an industry where we see overall much more demand. Light commercial vehicles is an area where in the future, you see that already. And if you look at the numbers around the world, much more demand because people are working more from home, more online deliveries. So you want to make that switch quite quickly, and offering incentives on top of technology development, etc., is absolutely critical. So if you take it away, you need to add on other areas here as well.
And if I could add to that, I totally agree. I think the same what we said about the private consumer applies absolutely to fleets, and we've seen that in the market. So last year in 2020, BEV registration by fleets and business were double those of private consumption, and that was 100% on the back of a much more favorable and in the future consistent outlook on the incentive side. So I do think we should take the positive lessons from the fleet side at the moment and really apply them forward, and also look at the more longer term fiscal picture, that we need to just give consumers and businesses clarity into the future to 2030.
We've also just had a question through from David Bushnell, who has said, do you feel that larger LCV fleets are absorbing the majority of the grant, and has that halted the uptake by smaller LCV fleets yet to make the transition? A little bit like our poll question first thing this morning with an electric vehicle sort of super league. What are the panel's views on that? Do you think that the danger is without sort of I think I'd spread that even wider between larger and smaller LCV fleets into the car and van split as well, because that's obviously an issue that keeps getting flagged as well, that the grant isn't ring fencing funding for vans versus cars. How can we sort of make that a little bit fairer? Gary, what are your views on how the grant is getting split up?
It's an interesting question. I guess we'd be classified on the large side of things. I guess my question back would be, has the grant actually run out? So are any of the small operators not getting access to the grant because big operators have absorbed it all? I'm not aware of that actually happening. I think from an environmental perspective and what the government's objectives actually are, it's to transition as fast as possible into a low emission fleet, and the more vehicles that can be bought and replacing of ICE vehicles as fast as that can be done, the better it is for the environment. So I think the grant is driving the right behaviours. I think it's probably not reasonable to restrict large fleet operators from getting access to the grant because everybody's in the same boat. We're all trying to achieve the same objectives. So I'm like I said, I'm not aware of the grant actually running out, so I don't think it's a problem, if I'm honest.
And Christoph or Konstanze, would either of you like to add anything to that?
Well, I mean, from my side, I would probably just highlight, that certainly the electric revolution will happen in LCV, and we've seen already the products that are coming. So we would truly hope that there will be enough offer of a greater variety to every type of fleet and every type of business consumer to drive this forward. So I'm quite optimistic there.
Yeah, I agree with what both said.
Great. We've had a question through from Andy Hartley, who's asked, "I'm concerned that when fuel duty is replaced with road charging, consumers will choose to hold on to old ICE vehicles, given EVs will be more expensive to run in comparison. We see road charging is a sort of hot topic that's coming up." I'll go to Christoph first on that.
Yeah, absolutely essential. I think the question is here, what can be done to ease the transition? I think the reform of motor tax is absolutely critical to encourage more car and van buyers to switch to electric vehicles. I think it's an absolutely critical point. Of course, there's a lot of money the government will be losing out if they abolish that policy. But anyway, I think this is something that needs to be tackled. I think we see that other countries in Europe and also in the US looking into this piece now. So I think if you want to have the ambition and continue to have the ambition as a leading country to focus on EVs, I think you need to tackle this, yes, and reform the motor taxing system. It's critical.
Absolutely. I mean, I'm happy to build on that. I agree. You need to do this, and you need to start now to give that certainty and outlook going forward, especially because everybody knows on fuel duty, the income will go down. But I think, like the question implies, there is a risk. If you indicate too early that there will be disincentives potentially against electric vehicles in a road charging that is based on mileage, and you don't find a sophisticated system of still having an incentive in there, then you might create new barriers or hindrance there. And I don't think that's the intention. So from that perspective, I do think the discussion needs to start as soon as possible so that we actually have something in place in time, because you can't switch it overnight. And I don't think that's the intention, but we just need to be mindful and thereby have the discussion as early as possible.
Absolutely, couldn't agree more. I mean, the planning profile of vehicle replacements 3-4 years out, as an industry, we need clarity on what the cost is going to be, and that will help drive the right decisions on what fleets are migrated at what point. And without that, a lot of businesses are in the same boat of not knowing what the 3, 4, 5th year cost is likely to be of running the fleet, and we do need that clarity and consistency as soon as possible.
Thank you. Unfortunately, we've run out of time, so that's all we've got time for in our Q&A. Again, apologies if there's any questions that we didn't get through to, but if any of the panel want to pick up any of that in the Q&A and chat, then please do feel free to do so. But thank you so much for joining us today. I just got a few final bits of housekeeping to go through. So decarbonisation is a policy priority for us, and we've not been idle these last 2 months since our last webinar. I'm excited to launch a new Fleets in Charge LinkedIn group today. The group is designed to be the home of friendly and informed debate and insight on all things decarbonisation for fleets. Fran has shared a link in the chat box now, so please do let us know if you'd like to join by using that link. We'll be using that space to share interesting tidbits between our webinars and events, so please do join and continue some of the discussion we've had today on that group. I also want to draw your attention to the EV training we have available. The BVRLA's new electric vehicle training courses were put together following a number of breakout sessions from BVRLA Tech and Operational Management Forum, where we wanted to fully understand from our members what support was actually needed with EVs. Off the back of this feedback, we developed our brand new EV course to not just be a mythbuster, but to support customer service staff, technical operational support teams with that day-to-day advice, as well as provide useful insights for staff in sales, account management, fleet and operations, and other driver support roles in the industry. So within that course, attendees receive full overview of the EV landscape, current market entrants. However, the real key takeaway is providing that really valuable advice for members when supporting their customers' need for technical operational support. Both courses have been really popular since their launch. Our next available course dates to book onto are the 16th of June for the EV car course and the 24th of June for the EV van and trucks course. When booking the course via our website or direct with the training team, if you mention Fleets in Charge April 2021, you'll be given a priority booking status. So anyone who's interested, please email training@bvrla.co.uk. And finally, our next webinar, Charging the EV Revolution, which, as the name suggests, will focus on charging infrastructure. We will once again be hearing from a range of expert speakers on the topic, and including an insightful presentation from Tom Callow at BP Pulse, who is a fountain of knowledge on all things charging, so that's one not to be missed. You can register straight after this if you fancy it. The link is being shared in the chat box now, and you can also be found through the website bvrla.co.uk/fleets in charge. So that's it from me. Thanks everyone for being such a vocal, chatty bunch today. It's great to be able to ask your questions. Sorry I wasn't able to get through quite all of them. And I hope that I'll be able to speak to you all again on the 23rd of June at our next webinar. If you want to hang around for a bit afterwards, you can check out the links to some of our latest research through the exhibition space on the homepage of this event. That's where you arrived when you started through this link. And you can also navigate there using the buttons on the left-hand side of your screen. So that's it from me for now. And I hope you all continue to have a good day. Thanks for joining. Goodbye.